Today, we have some breaking news that could have a significant impact on your real estate plans. The Bank of Canada just announced a 0.25% interest rate cut, and in this video, we'll be discussing how that could impact you whether you're looking to buy, sell, or invest. To start, why did the Bank of Canada decide to cut interest rates? This move represents a delicate balancing act. While inflation eased to 2.5% in July, bringing it much closer to the 2% target that the Bank of Canada has, there are still concerns about the broader economy. The Bank of Canada monitors a variety of economic indicators, and recent data suggests that the Canadian economy is not growing as robustly as expected. The projected GDP growth for 2024 is just 0.9%, which is quite sluggish. The bank is concerned that without some monetary stimulus, this could drag on and lead to either stagflation or a mild recession. By lowering the interest rate, the bank is aiming to stimulate economic activity by making borrowing cheaper and encouraging consumer spending as well as business investing. If you're new to this channel, my name is George. I'm a local real estate agent here in Waterloo region. So if you have any questions about the home buying or selling process, reach out to me directly at the phone number provided in the comments. For home buyers, this rate cut is significant. When the Bank of Canada reduces its policy rate, this makes variable mortgages cheaper, and it also typically reduces fixed rate mortgages, making home purchases more affordable. So let's break this down. The cut may seem small, but it can lead to substantial savings over the life of the mortgage. And the reduction in your monthly payments means you're going to have some money freed up for other expenses. With the lower rates, you could also be able to afford a more expensive home or qualify for a larger mortgage. This is going to open up more options for you, which is always great in a competitive Kitchener-Waterloo real estate market. If you already own a home and your refinancing is coming up, this is great news because you're going to be able to lock in a lower rate for yourself. An advanced tip when it comes to refinancing and mortgages, some people are electing to go with the variable rate mortgage, which is currently higher than the fixed rate. But because the penalties for breaking it are much lower, they're going to ride it out for a little bit longer until those fixed rates come down even more, and then they can lock in a fantastic fixed rate for 5 years. Now, it's important to remember that while lower rates can make home buying more accessible, they can also drive up demand, which might increase prices. Buyers should prepare to act strategically and be ready for a potentially more competitive market. Now, sellers, you're probably also wondering how this rate cut impacts your plans, so here's the scoop on the impacts for you. As borrowing becomes cheaper, more buyers may enter the market, which could lead to more offers on your property and possibly driving up the price. Another benefit of more buyers entering the market means that your home could also sell faster. This is a huge perk if you're looking to sell quickly or you have concerns about carrying costs. The overall market growth is slow, and while the rate cut might boost demand, buyers are still very cautious. So pricing your home right from the beginning could lead to a quicker sale with fewer price reductions. Now, if you're an investor, the rate cut presents both opportunities and continued challenges. The lower interest rates mean you can finance new properties at a lower cost, which means purchasing new investment properties or expanding your portfolio looks a little bit more attractive. However, the rates still remain relatively high, and even though we have high rent prices in Kitchener-Waterloo, it may not offset the cost of your mortgage. So it's really important to do your cash flow calculations before jumping into something. Looking ahead, what can we expect? The Bank of Canada is likely to cut rates further this year, especially if the economy does not continue to respond. On the flip side, if the economy responds too aggressively, we might see more of a stabilization in terms of rates. In my opinion, we are likely to continue to see more rate cuts as the year goes on. As for real estate, the next few months could see increased activity, especially as buyers and sellers react to the new interest rate landscape. It's important to stay informed and be prepared to act quickly as the market shifts. If you have any questions about how this rate cut might impact your buying or selling plans, drop them in the comments below or reach out to me directly at the phone number that I've provided in the comments. As always, if you learned something new in this video, please give it a thumbs up, share it with your friends, and subscribe to our channel.